So this is just a short video to explain the information on your tax returns so that it'll hopefully help you when reviewing the tax return that Matt send over to you for the 2021 tax year. So although it's really important to review all the information on all of these pages, so this is the body of the HMRC tax return, so it is really important to look over these, but I just want to draw your attention to these final two pages at the bottom. So these show a really good summary of the information included and how the tax has been calculated as well. So I'm just going to run through this so we can hopefully provide a bit more information to you when you're reviewing your tax return. So on this particular example, there's a variation of different incomes and allowances included. So some of these might be applicable on your tax return, some might not, but I'll just run through the main ones here for you. So on this calculation results page, you'll see that the top bit here is a breakdown of the actual income that you've received. So it's broken down into the different types of income, and we've got the total here. Then we've got your personal allowance deducted for the year, so the £12,500. This may change if your income's over £100,000, but the standard personal allowance is the £12,500 for the tax year. Then we've got the total income on which tax is due, so the actual taxable amount based on the income. So that £56,500 there. So that's taking your income that you've received less your personal allowance here. Just underneath there, if you have any tax reliefs to include, such as gift aid payments on charitable donations or personal pension contributions, then there'll be a sentence here to let you know that your basic rate limit has been increased by the amount of the donations or personal pension contributions. So more of your income is taxed in the basic rate rather than the higher rate. So that's a benefit. So just underneath here then, we've got the breakdown of how your income is actually taxed. So you'll see there's a breakdown of the different types of income. We've got pay, pensions and profits here and your dividends here. And there's also the breakdown of the actual tax rate that it's taxed at. So for example, the dividends here, you'll see that we've got the £2,000 tax-free allowance, so nil, no tax due there. Then we've got the basic rate amount taxed at 7.5%, so the tax that's due on that. And then the higher rate taxed at 32.5% and the tax that's due for the higher rate there. You'll see that the total income here matches the total taxable income here as well. So just following on from that, you'll see in this example that there is income from property. So if there's any finance costs in relation to the property, then you'll receive a basic rate deduction for those finance costs, and that's shown here. So that's reducing the tax that's due. So we've gone from the £9,321 here, we've taken off the £800 for the relief for the finance costs, and we've got the £8,521 here. If you have received child benefit in the year and your income is over £50,000, then you will have to repay a portion of that back, which is known as the higher income child benefit charge. So that's what's shown here, is that the child benefit received is being repaid because the income is over £50,000. If you had any student loans that needed to be repaid, that would also be included down here. So your student loan repayments to get to your total tax due here. So the 10,361. So that explains the actual calculation of the income that's included and how that's taxed. Moving on to this second page down here, we've got your tax payment summary. So this is showing what actual payments are due and when for the tax year. So we've got the tax due, the £10,361 that's been brought forward from the calculation page. So that's the tax due that's due for this year. Then we're deducting any payments on account that have been paid from the previous tax year. So that's the £5,500, leaving a balancing payment of 4,861 here. So just underneath in this summary, it's actually telling you the amounts that need to be paid both in January, so 31st of January, and by the 31st of July as well. So we've got the balancing payment, the 4,861 from up here. Then we've got payments on account. So payments on account are due when your tax liability, this figure up here, is £1,000 or more. So the payments on account are always 50% of this tax liability up here. So you pay 50% in January and another 50% in July, and they go towards your next year's tax liability. So it's like a prepayment. I hope that helps. If there's any specific questions around your individual tax returns, then please contact the MAP team and we'll be able to advise further. Thank you.